Alright, hello everyone. Welcome to another weekly review. Hope everyone's had a good week. But it's the end of the week today, and it's time to review. So I am streaming right now. I will post a edited version later, but I'm just streaming in case anyone wants to hop in and ask any questions. Who knows, maybe. But thought I would just stream, and I gotta start the recording at the same time. Hello, Neko. Sorry, I had to clear my throat. Alright, let's start. Glad to see you in here, Neko. Now, I started the week with the Nasdaq, as I always do. I mentioned how previous week candle closed lower, and I'm splitting up the weekly fair value gap as I'll be studying those levels if price decide to drop into it. So this gap here, we had a down close candle the previous week, and I'm wanting to see, okay, is this bearishness going to continue? And if it does, we trade to a new low. I'm watching that 50%, and then 75%, and 100%. I could entertain the idea of prices making a short-term high and continuing to drop a little from the rejection block. So I said this could be a short-term high, and we continue this momentum on Friday down to the sell side liquidity down here. Buy side and sell side is what I'll be watching at the all-time high and low of the chart. So order flow is currently bearish. If Nasdaq finds support here, however, this would be S&T with ES and the Dow. Alright, so I'm talking about this buy side and then this sell side down here, and I'm mentioning both these highs and lows and saying how, okay, I'd like to see a sell side run because order flow seems to be bearish. It seems to be, disrespecting those up close candles and showing these big rejections and falls. So I'm going into the week, into Monday, expecting, with the idea on my mind that we could continue to trade lower and potentially target that sell side. And a dollar monthly chart is about to close and doing so above 50% of its previous down close candle. I would be expecting further higher prices in the coming week. Obviously, this is also for geopolitical reasons. I think the dollar needs to go higher. But if you look at the chart, this candle, this was taken on the last day of July, June 30th. It's closing way above that 50% of that down close candle. So I want to see the next month, in the coming weeks, trade higher towards that buy side liquidity. And this week it did not do that, actually. It rejected quite significantly, which surprised me a little bit. But we'll see what happens in the next weeks. And bonds did take a hit, and I didn't have a clear bias on the bonds. Oh, Neko said, yeah, I was targeting lower initially too, but July honestly typically makes the Nasdaq explode to the moon. Yeah, July is one of those months that you really don't want to be doing much, according to ICT. It will sometimes, off May and June sell side delivery, it's going to make a low and then start a delivery higher, or continue a delivery higher from June reversal. But usually it'll like chop around, which is, summer. I mean, it's typical. Everyone's on vacation. There's not much money in the market. So yeah, bonds took a hit. I don't have a clear bias on bonds right now. I will go with the order flow, which is bearish. We could drop down to make another low, as I believe the 5-year bonds have relative equal lows. Alright, so we could see down here a new low again. I think a lot of people believe that the rates are coming down. So there's more people that want to buy bonds than that want to sell bonds, right? Which is just telling you where the liquidity is on the bond futures. So that's it for the weekly review. You have my, not for the Sunday analysis, but you have what I'm going into the week with, the mentality I have. All right, so Monday. Oh, and this is the economic calendar. See, we had news on Monday. Tuesday had pretty good news. Powell was speaking at 9:30, and then Wednesday was a half day. So FOMC actually happened during market close. I didn't know it was half day, but I was actually trying to look for trades on Wednesday. I didn't end up taking anything, but I didn't know it was a half day. If I had known, I would not have looked to trade at all, and I would have actually streamed. Thursday, obviously, it was July 4th, and then unemployment rates came out on Friday, up a little bit higher than what they were expecting. All right, and Monday, now today drew slightly lower and ended up closing higher. See how we made a sell side run beneath this daily swing low, but then we immediately went right back up. There was something I was looking at on Monday, but hold on, let me read this. After trading to an old low, price traded higher. I want to see if this will form a market maker sell model tomorrow. I'm also considering a 3-day look back. This means I want to see price trade down to sell side tomorrow. If it does not do so, I'd expect an explosive run higher. Alright, so this is June 27th of June 2024. The reason I'm using this 1800 open, right, this daily open, is because this day created a market shift. This day ran up, took out some buy side, the rejection block, the purple line there on the daily chart, rejected, and then created a market structure shift. Because it did that, at that day, I'm marking that day, and I'm looking into the past 3 days, and I'm looking ahead 3 days, and I want to see whatever PD array that we can run in the past 3 days. I want to pick one, which I'm picking the low, and I want the algorithm to deliver around that 3-day mark. So this is why I wanted to see this immediately tomorrow. If it did not happen tomorrow, it's because obviously the algorithm has something completely different in mind, which is to go higher, and it will usually do so a lot, way more violently than it would if it went down to the sell side liquidity and then went up, right? Because it's showing it's failing. It doesn't want to go down to the sell side liquidity. Is you can think of it like a seasonal tendency. You know how we saw May is usually the month that goes down. Sell in May, go away, and June too. Because May didn't do that, it went higher. It went up in a explosive manner, way offside from the sellers. And same with June. So that kind of tells you that, okay, if we're not respecting these tendencies, these rules that the algorithm has, well, obviously price is going to be doing something way different. So I think this week was a little bit, what's the word, sporadic, like not too predictable. I think a lot of people probably had a lot of trouble trading and navigating in the markets because I don't think it delivered the way it should have. And I did see kind of like how Monday we made that low, the short-term low, and we potentially shifted market structure higher. And then this is why I said if this doesn't happen tomorrow, this is a market structure shift higher, and we're just going to go up for the rest of the week. And this is the run lower that forms an order block down to the south side liquidity, and this happened conveniently during 9:30 open. And so what am I saying about the 10:30 candle? I anticipated the run lower that stabbed into the sell side liquidity, and after this run, I noticed a 10:15 candle stabbed violently into the range that was left. This was a quick reversal and didn't make any stop runs on this time frame. So I'm talking about a short-term price run. See how it was just very, very quick. Maybe this was a short-term low actually that was taken out. We were also way beneath the midnight open after London, and 9:30 traded lower for like 200 points. Yeah, so I mentioned this, I believe I was streaming on Monday, but I mentioned how, the London session had traded lower violently, and then we retraced a little bit, and then the 9:30 open sends it lower. So I wasn't too confident in seeing something work out immediately. I thought, maybe price is going to consolidate and it's only going to start running at around lunchtime, right? Which is why I chose not to really look for anything. And when I did start to see this order block form, I wasn't too confident immediately that it would run nice and quickly higher. But On the 5-minute chart, you have a nice stop run there, where you have a breaker being formed. Price gets above the breaker, comes back into it, and continues to run higher. Then it creates another stop run when it initially retraces into the breaker, into the PD ray. Then it goes up a little bit, stops out the early buyers, the people that got in early, and then it goes higher. Right? It needs to do that. And so once it does that, it starts to deliver higher using these PD arrays as a way to climb. This is a market maker sell model. Or no, buy model, my bad. So you have the initial 930 open, which sends it all the way down here. Trade goes up a little bit, gets people long, thinking that we priced in the low beneath the sell side liquidity. Then it comes back, and that's when it creates that market structure, which is used as a market shift to then do a 2022 model. Okay. On Tuesday, this is where we start to really go higher. And at this point, I was completely saying, okay, it will just go higher for the rest of the week, because that delivery that I was talking about, the IPTA delivery, failed. All right, so this was my chart before 9:30. I was undecided with my draw. I wasn't sure about going lower so much anymore because of how the current day already traded lower, and the trend lower leaves liquidity higher and makes it harder to see prolonged moves lower. I was also watching to see if the white fair value gap would act as an inverse. We're way beneath midnight open, so that is good. I would want to see it go higher because we're beneath midnight open. We've made this stop run here. That's the first thing I notice, is that sharp run down beneath all this consolidation. And then a market structure shift, 2022 model, right? These are the things that just pop out when I look at this chart, okay, and the way I've annotated it. And now I want to see if these fair value gaps are going to reject price, showing evidence that we may want to go lower and that order flow is bearish, or if it's going to be continue to be bullish and start to use these fair value gaps as support. And notice how we have a trend lower, and so I see the need to go higher. And if we do that, if we do go higher today, that sell side delivery isn't likely to be hit, and we're gonna probably go up the other direction. Can I ask, how did you recognize that as a turtle soup and not a continuation of bearish trend? Yes, that's a good question. Let's go back to Monday. So it's simply because of the higher time frame. All right, I suppose you're talking about, right, this like turtle soup there, how it initially went higher and then it drew back one more time, making you think that it could be trending lower. Because I don't really look at bearish trends, I look at liquidity. So in the higher time frame, where's the liquidity? Here, okay. So once we hit this liquidity there, well, let's start with the daily chart. All right, daily chart, there's a swing low right there. So I'm watching that swing low to see if it wants to get hit, and it's gonna have liquidity at that swing low. Once it gets hit though, I need to see a short-term low in the hourly chart, this low, initially come down, take out that low, and then start to go higher, and it comes right back down, taking out that swing low at the same time, running the sell side liquidity. So price is fractal this way, and this is a breaker on the hourly chart. Price gets above it, uses it as support. So we need to leave these breakers. And then you have the same thing happen on the lower time frame, where price hits the sell side liquidity, but it needs a short-term low in order to leave a breaker. So it does that, and it leaves the breaker. So price will always leave the breaker, and that's why, like, when I see on that 15-minute chart, if ever we come down here and we reverse very quickly, I'm always careful about taking the first shorting opportunity, because the first shorting opportunity oftentimes will fail to create the breaker. Right? That's how price is fully efficient, and the people that the smart money that's buying at that sell side liquidity on the daily and hourly chart, the people that want to buy all the stop losses at that low and all the people market selling short at this low, they need people to get into the market. They need people to find reasons to get into the market, And so they create this basically deliver price in a way that, people see it drop, they start to sell short on the break of that low. It initially comes up, and it might get them into longs, and that just creates more liquidity. So they start buying, and then they get their stop losses hit on that run lower. So they get taken out, and the money goes to smart money, and then it goes higher. Okay, IBDA prefers a breaker for a reversal, so it creates two swing lows. It's not necessarily IBDA, but if I could just draw it out here, price is going to trend, right? What do we know about trends? Is it gets people thinking in one direction. So people are going to look at this chart and they're naturally going to think that it's just going to continue going higher and it's going to trend higher. So that creates a trend line, and there's usually going to be liquidity at that trend line, right? Liquidity there. That's money. So prices will oftentimes trade lower in order to stop out those traders, right? Now, take that concept, but as it's doing that, as it's trading lower on the lower time frame, you're going to have that run come down. It's initially going to go up, and it's going to prove the trend right. The people looking at the lower time frame, they're going to think it's trending lower, and they're going to show evidence that it's going to continue to go lower to get people into a trade, and then it's going to go higher. And that's what a market structure shift is. So Neko, if you watch 2022 model, I think episode 3, ICT talks about a market structure shift. Right, market structure shift is only created once we've taken this higher time frame liquidity. So say that's the higher time frame liquidity, that dash line there. Once we've taken this liquidity on the higher time frame, then we have that breaker on the lower time frame, which creates the market structure shift. That short-term high is the market structure shift because it's been a breaker that is created with that short-term low being taken out. And I always put an X on it. So if you look at my charts, and whenever you see an X, that's like me thinking it could be a turtle soup, and that it will form that breaker. That's just the nature of price. That's how it moves, right? So again, very simple. It goes down, short-term low, comes right back down, and goes up, market structure. Or it goes up, short-term high, goes back above it, and goes down, market structure. And inside this first price leg, I used to always lose money. I used to always get in on this first leg, and then it comes back out, stops me out, and then it goes in my direction. So yeah, alright, glad you understand. Let's go back to Tuesday. Okay. Alright, so this is how we close. Obviously, the 3-day look back did not give me the draw I wanted. I wanted to see a market maker sell model to trade down to sell side liquidity. And the fact that the algorithm didn't price it down there is a telling sign of how bullish it would be. As you can see, a huge buy day occurred. I'm glad I knew not to go short and to be patient. Yes, it was telling me, don't go short. And this was taken at 9:19 before 9:30 open. We've been trending lower. We have buy side up here. I'm studying to see how these gaps are going to be used as support or resistance. And if I see act as support, it's gonna try and stab through this trend. So I'm not going to look for it. Already created the 2022 model already, so I missed the move. I missed it. If I would try and trade it and go long, I'd be chasing it, and it'd be above midnight open after 9:30. And it would not be part of my model. It would not be part of my rules. So instead, I studied it. And you see how much higher we went because we really wanted to disrespect that sell side liquidity, right? Again, ask yourself, where's the liquidity within the past 3 days? If it's lower and the algorithm doesn't go lower, is because it really does want to go higher. And it's going to do so very quickly. So the only PA I liked was ahead of 9:30 in the AM session, which was a bit early, as I just talked about. And we had formed that 15-minute order block. So I already talked about that. Seeing price quickly move up from the bullish order block left the buy side imbalance, sell side inefficiency, and this was used as an institutional order flow entry drill towards the highs. So right there, that's something that if I had been, up at 7 a.m. and I had studied this run lower and then anticipated the market shift, that is something I would have looked to take part on with that small fair value gap entry running up, and then I would have had to get in for the retrace. Well, I'd probably been out by then, but it would have retraced, hit the order block, and it continued to run higher for the 9:30 open, which sent it higher. And this was not a Judah swing, right? I don't think I was streaming on Tuesday, but as I was seeing this, this was not a Judah swing at all. I believe I recorded on Wednesday, and the same scenario happened, where we started to go higher, and I knew that a lot of people would think that this would be a Judah swing, and it might get them into shorts later, but because I used to make that mistake. Right, this is the 1 minute chart after 9:30. I used to make the mistake where we see 9:30 go up, and at 10 o'clock I start to look for shorts, and I see this move lower, and I try and sell off of it, and it would work initially, then it would fill. I fixed that by going for 10 points, just 10 points. If I had looked for 10 points on this off this fair value gap, had a negative RR, 10 point take profit, 15 point stop loss, yeah, I would have made money. I would have made money, but I would have seen that I would have been offside, and I would have journaled that, and I would have been, still feeling good about, making money. I didn't lose money, and then I didn't gamble or anything, because I made money, and then I would be able to learn that way and start to take less trades, kind of qualify the trades I'm taking. Obviously, you can see there's nothing here that's of high quality. Yeah, you can inverse this fair value gap, but look how slow it is at that point. After all the explosiveness from 9:30 open and the early morning session, right? The move was earlier in the morning, which sometimes it's just like that. The move happens earlier during London, whenever, and you have to accept that, that's what happened. And just don't trade it. Just wait until next week, maybe next month. I don't know. But you'll see that a lot of times, especially on these slow months, the moves happen during London or during times where you don't trade, and that's okay. We left another big range today and traded to a new all-time high. So another up close candle up to the buy side of liquidity. Okay, and this is something I told my friend. Sell side draw tomorrow. No, I was teasing him, but this was July 1st, so Wednesday or 3rd. That was on Monday. So I sent him this on Monday. I want to see the draw on the sell side liquidity. Said if it doesn't work, we're very, very bullish, right? So this is in fact something that I was looking for, and I'm noting here that as I was saying, it did really go higher violently. I mean, almost no retracement. It's in premium the whole time, and it just continues to run higher for the whole week is what I was expecting, right? So I don't feel comfortable trading on these things, right? Like my model is turtle soup 2022 model-ish, right? I like to get in at the lows, and when I see 9:30 open again, run it higher, and I know that it's going to go higher, I don't try and chase it. I just stay out. I'm not confident enough to trade it because honestly I just haven't been doing it long enough to make money in every single condition. I pick one condition and I get used to it. But some people, their personality might be to trade in these environments, and if that's them, I don't subscribe. I don't like doing that. But if that's them, then that's them. So I'm not saying no one should be trading these things, because there's definitely trades that you're able to find some nice inverse fair value gap setups that are in premium. But you need to really be in the know and be confident that it is going to go higher. And honestly, it's something that I was not too confident because it's just in premium. It's not something I'm used to. But with price running way above the midnight open at 9:30, my model would not present itself today. It did do a good job of dipping into the midnight open inside a 15-minute bullish fair value gap, and then quickly ran higher. And this is that bullish fair value gap created at 9:30 open. It dipped into it, hit the midnight open, and then went higher. The 5-minute chart offered no noticeable accumulation during the 10 o'clock news, and instead quickly ran back higher to then consolidate above midnight open. This consolidation accumulated stops that were triggered before a nice and big run higher after a down move that left a bearish fair value gap in that red there, or the pink. This is when I wanted price to go higher. And I remember I was looking at this, and I believe I posted the recording, and you kind of see me use or frame this as an inverse fair value gap. But initially, I was looking at this and I was saying, okay, price could use this and reject a little bit and dig deeper into this fair value gap, or deeper underneath the midnight open. If I wanted to take a trade, that's what I would have wanted to see. I would have wanted to see price beneath midnight open. Right, but it didn't do that. Instead, if you ignore this wick, I often ignore these long wicks. It's just, discrepancy. Like, I don't really look at it very much. I don't like to see those long wicks, and I ignore it. Now, this is a short-term low, and price comes beneath that short-term low. Not the bodies don't come beneath it, and that's something that led me to believe, okay, it might come back lower and then close beneath that low or beneath these bodies. And so I wasn't fully confident that it would work immediately, but yeah, you do see it eventually. That doesn't come back, but it closes way above it, and it would be too late to look for any retracement and see it used as support. But this is one of the trades that I did frame this entry here up to these highs. So not the whole thing, but these are the sorts of trades that I'm talking about that I'm not too confident in taking. Tanja actually took this trade, so that props to her. But these are the types of trades that maybe in 20 years when I'm more confident, I have more experience, and I know my model like the back. Well, I do know it like the back of my hand, but I'm more experienced and seasoned. Maybe in 20 years is a lot, but maybe 5 years. I'm more seasoned, and I know how to behave in any market condition. Then I can take these trades, which this trade, I know that not a lot of people probably were able to spot this going all the way up to the buy side liquidity. They were probably thinking Judas swing, and again, just like yesterday, fair value gap that is bearish is gonna go lower. But instead, it just ran higher very quickly, and yeah, that's what occurred there. But I would not have been confident at all holding this to that buy side liquidity. And Friday, and even though unemployment came out higher than expected today, price ran higher. So this is the unemployment data that I was talking about on Friday. The unemployment rate, 4%, and then the next one is at 4.1%. Now that's bad news, but price still went higher, right? Because markets don't, what price doesn't react off of, oh, hold on, I have a comment. Wait, let me, actually, no, Tandra canceled her trade because she has a 5 handle slippage. Oh, yes, I remember. But then it exploded up. Yeah, I remember that. Yeah, I was actually, I was in a Discord, and then somebody told me Tanja went long when I was wanting to see the longs, and that scared me. If I was in a trade, it would have scared me out too, to be honest. But yeah, like this, I think I remember actually she did close her trade when price, maybe it was just because of the slippage she did it, but where was it? Yeah, price closed beneath that 1 minute inverse fair value gap. I think that's when she closed the trade. Yeah, it is the best indicator. I don't understand. Like, props to her for streaming, but her intention is clearly not to make money and to be a trader. It's just to be an entertainer. Like, if I were her, I would stop streaming, stop doing anything, and just focus on yourself, because it's clear that she has some things that she needs to fix. Anyway, so yeah, higher unemployment came out, but prices still went higher because the markets, they don't react to what the news is. They react. The news reacts to what the market does most of the time. But I talked about an old low being run out on Monday, right? That's the low there on the hourly chart, which is also a daily low before violently going higher. I was left uncertain between buy side or sell side during Tuesday. If price were to go up as it did, I was ready for extreme higher prices because of the failed seasonal tendencies. That's part of the reason I didn't expect Friday to immediately go down. Right? And a lot of people might be here thinking that it's going to do the, what is it called? Thank God it's Friday TGIF setup, where Friday moves into the daily range. Right? But I mean, that's a possibility, but I need to see it want to do that. And when I got up on Friday and looked at NFP, like, this didn't really tell me anything. It just, NFP left a huge wick. Look at the body, how small it is. And again, I don't like the wicks. I believe that if you turn off the wicks, you should be able to read market structure with or without the wicks. And if you turn off the wicks here, I mean, there's no sell side run, and there's no buy side run, right? So when we see 930 run up way above buy side, it already ran buy side ahead of 930, I believe, if I go to the lower time frame. Yeah, it already nearly ran it, actually, not quite. And then it runs it here. At this point, it retraces, continues going higher, and then uses this as an inverse fair value gap, completely disrespecting these bearish fair value gaps, and just continues to go higher. Even though we're way above the midnight open, we're still showing, on the higher time frame, displaying a bullish order flow, right? Because of how extremely bullish we were to get up above that sell side liquidity. I almost think that this was manual intervention, right? Like from back all the way back from Tuesday, or maybe Monday. Neko, he said, yeah, thank God I had graduation ceremonies yesterday and today, so I had to skip this unclear price action lull. Well, congratulations, Neko. That's great. You graduated from university or high school or something else. But yeah, like I'm glad it was a holiday week. Wednesday half day, Thursday, and then Friday was also a no trade day because Thursday was a holiday. So day after holiday, you don't want to trade that. So I mean, that's why I didn't trade. But I'm certain if I had tried to push it this week, if I had looked for trades, I would have won some nice trades on Monday, and I would have won on Tuesday and Wednesday. But I think Friday I would have gotten completely destroyed. I have to be honest. I would have probably thought that this would be a TGIF. But yeah. College, thank you very much. Yeah, congratulations. All right, so I guess that's it for the weekly review. A very tough week. And let me just look at the bonds. I don't keep track of them during the week. But bonds did start to bounce, it looks like, with the Nasdaq going higher. So still not clear where it's gonna go. I think it's maybe in a consolidation. And then the dollar, if its dip continues, I mean, it could just be going lower to disrupt this trend. And so it maybe trade beneath that low. I don't know if it's gonna get down to this low, but this could be going lower for now. I mean, I don't think it should be going lower. I think that quickly it might start to run up actually any week now. But I would be just waiting for this trend lower to bottom out. And I'm not really trying to see if it's going to trade to that low or this low. I'm just going to wait to see if it bottoms out and use it as a barometer. But since the dollar right now seems to be going lower, I would be going forward next week with the, before looking at what the Nasdaq is doing, immediately with, okay, any runs lower is going to be harder to see because the dollar is trending lower. And if the dollar order flow is lower, we've closed beneath this fair value gap there, and we could be using it as an inverse. All right, because the dollar is being priced lower, it makes it harder to see any sustained runs lower with the anything priced in dollars. So with that out of the way, yeah, thank you very much for everyone that tuned in, right? Neko, and I think we had one other guy hop in here and then leave. And yeah. See you next week.